question. Next up, Hansen from Melonport. And I want to ask the audience, where are finance representatives? Raise your hand. In Frankfurt. Who's from a bank?
Ich habe keine Slides. Ja, habe ich schon gehört. Ich mache einfach nur das im Hintergrund. Klar, gerne.
Okay. So Hansen is your audience.
Thank you.
Are you getting the audience?
No, I don't have slides.
Huh?
Yeah, just cool.
Yeah.
One last thing. We will have no questions after the talk, I have guessed it, but we certainly have questions. So please reserve them for the panel discussion from 4 to 4:30. Are you ready?
I'm ready, yeah.
Yeah, I don't really use slides. I don't like slides. I find them a bit distracting. Hi everyone. Thank you all for coming. My name is Hansen. I'm the head of external relations for Melonport. And today I'm going to give you a sneak peek of how we think the world of asset management is going to change over the next few years. Melonport was founded by Reto and Mona in July 2016. Back then I think Bitcoin already existed for about 7 years. And Ethereum and a couple of other more established cryptocurrencies were already in circulation. But overall, I would say the market was still very much in its infancy. There's a few players in there, mainly just some early adopters and computer scientists. And I mean, you would hear about Bitcoin sometimes in the news, right? Mainly associated with something negative. But the other cryptocurrencies at large were unknown to the general public. And now, look at where we are now, right? Not even 2 years later, we hear about different cryptocurrencies on a daily basis in the news. And the overall market cap has grown from a mere 10 billion when we started Melonport to about $450 billion today. And it's getting increasingly difficult for large institutions or for countries to ignore this new technology. I think I read last week that the president of Venezuela announced that Venezuela is launching their own cryptocurrency called the Pedro to help them get out of this economic crisis that they're in. I think I read half the white paper. I didn't quite understand how they're going to do it. I don't think the people who wrote the paper understand it themselves. It's supposedly backed by oil, but to me it just seems like a zero coupon unsecured debt, which is used as a currency, but we'll see. Anyways, for the general public, slowly getting the hang of it, they're starting to understand what blockchain is about, and they're starting to see more and more value in it, right? And from an investor's point of view, many people are treating cryptocurrencies as a new emerging asset class, right? You have the traditional asset classes like stocks and bonds and so on, and some more exotic stuff like high yield and emerging markets. And people see cryptocurrencies as a new asset class. We go even one step further than that. We don't believe that cryptocurrencies are going to stay a self-contained asset class by themselves, but we think that blockchains are going to spill over to all industries and optimize processes there. So what that means is that blockchains, they are part of a wider trend of digitalization. And one particular industry that has lagged behind quite a bit in terms of digitalization is the finance industry. And the simplest example for that is that you can Skype with your friend from across the world. You can transmit sound and motion pictures in real time in high quality. But when you try to send that same friend 100 euros, it takes you several days to settle, and you have to pay quite a high fee, and you lose an exchange rate. And then you ask yourself why, right? I mean, sending money is just sending a number over from one bank to another. It's far less complex than sending picture and sound. So yeah, the blockchain, the finance industry is lagging behind, and we think that blockchains can help to make processes more efficient there. And part of this process will be manifested in form of digitalizing the traditional assets. Yeah? Or in other words, we think we're going to see a widespread trend of tokenization of real-life assets. So soon you won't be buying Deutsche Bank stocks anymore, but you might be trading Deutsche tokens. And we're already witnessing this trend, right? Tether, for example, is pegged to the dollar, so that's tokenized dollar. And there's some companies like Neufund and Jimbo who work on helping startups to tokenize their shares instead of using shares. And we don't really know how long it will take, but my guess is it's probably going to be sooner rather than later. Because if you look at the historical adoption rate of new technologies, you see that the rate increases. Right? How long did it take us all to have a personal computer at home since they were invented? Maybe 40 to 50 years. And what about cell phones? Right? Cell phones are already much faster, 20, 25 years. And today, companies like Uber and Airbnb, they can take a big share of the market within 2 or 3 years. And we think it's going to be similar when it comes to blockchains. And when the day comes that blockchains are an integral part of the financial system, and most assets have been tokenized, we need to be ready. We need to have the infrastructure in place. And here's the first problem that we saw, right? Right now, we are not ready. The current infrastructure, which consists of custodian banks and stockbrokers, exchanges, fund administrators, they're built on outdated technology. Yeah? They can't, the institutions today and their tools, they can't really handle investments in digital assets. Yeah, they can't keep up with this fast rate of digitalization. And the reason for that is simple, because investing in stocks, bonds, commodities, you name it, is simply not the same as investing in tokens. And this is where we come into play. We are building this new infrastructure, and we call this infrastructure Melon. What we're doing is we're building a fully decentralized tool for people like yourself or for large institutions to set up investment funds in digital assets. Yeah? So you can literally run a hedge fund at home from the convenience of your own web browser. Until now, if you wanted to run a hedge fund, it was associated with high upfront costs and immense time consuming. And now you can do the same thing if you just have a laptop and a decent internet connection. So let's have a look. I didn't look slides. Let's have a look at how we do it, right? Let's look at the design. At the core of our design, you have the Melon Fund. And the Melon Fund is just a set of smart contracts. And these set of smart contracts, they act like the custodian and the accountant of the fund. So it's a place where all your assets are held. And you can imagine it kind of like a wallet, but a very, very sophisticated wallet with far more functionality than just sending money around. So when you want to create a fund, you would go to melon.fund, the website, and then you choose those functionalities that you want to have. So you define the parameters. So you choose how much management and performance fee do I want, which exchanges do I want to trade on, what's the asset universe, what kind of risk management suits my strategy. And once you finish that, you deploy the fund on the blockchain, and from that moment on, you can only behave in the way that you specified before. And that whole process should just take you a couple of minutes. I can literally have every single person in this room invest in my fund simply by sending Ether or another currency to the public address of my fund. And the smart contracts, they take care of all the internal accounting. They calculate exactly the AUM, the NAV, the profit share for the investors, depending on when they would invest it, and they also calculate the management performance fees automatically. As a fund manager, you have the control over the assets in the fund, but we made it in a way that you can never run away with them. The investor is always in charge of his own private keys, which is quite cool, right? You can, if I see like in Zimbabwe, a talented young kid who's good at investing, I can send him $100,000 worth of tokens, and I can be sure that you'll never be able to run away with my funds. You can also trade directly from your Melon fund, from our interface with the exchanges. And we're currently first integrating the decentralized exchanges. I think he already spoke a little bit about the exchanges. The main advantage is, of course, removing the counterparty risk. Because you don't have to send your tokens to the exchange anymore, but what you do is you just do atomic swaps. You trade directly with each other. Okay, so recap, we have the custodian with the asset held, we have the accountant which does all the accounting, and we can trade directly with the exchanges. What's still missing for a fully functioning fund administrator are two main components, KYC/AML and risk management, and we are currently building those two modules. I think the easiest way to understand how the smart contracts work if you look at the risk management module. Yeah? So I used to oversee a fund of fund before I joined Melonport, and we had certain investment restrictions. For example, no more than 10% per single position, or volatility target between 5 and 10%. You want to be able to liquidate your portfolio within 3 days. And you can code the rules of risk management onto the blockchain, and the smart contracts will take care of that. To just give you an example, right? Let's say you already have some Ether in your wallet, in your fund, and let's say 8%, you want to buy 5% more. And what it does is, before it executes a trade, the contract calls the blockchain and asks, right? If I execute this trade, will it exceed the 10% limit? If no, then let's trade go through. If yes, reject the trade or fill it up to 10%. And you know that right now, most investment banks and hedge funds have a whole back office and operations team to take care of all those functions. Yeah? So if you are trying to compete with someone from Goldman to run a hedge fund, the chances are that you'll probably be worse than him, even if you assume that you are equally good at investing. And that's exactly why, right? They have this whole back office team that takes care of all the admin and operations, so the Goldman guy can just focus on investing. But when you have to do it, right, you don't have that. Even if you have just 100 investors, you would spend almost all your time just doing admin work, calculating exactly the profit shares, to take care of the redemptions and new investors, we have to make money around. You don't even have time to read anymore, or find investment ideas, or build models. And we are providing you exactly with that back office and support team that Goldman has. Just the difference is that Goldman's team consists of people, and our support team doesn't have people. Yeah? No management, no employees, no buildings. It's just an autonomous fund administrator. And there are many benefits, in my opinion, of using a blockchain-based system opposed to the current system. And the two main benefits are, one, transparency, and two, inclusion. Yeah? Let's start with transparency. There's an inherent lack of transparency in the financial industry. We don't really know where our money flows, right? How is it possible that almost everyone in the world missed something as big as a global financial crisis? It's because it's not transparent. And blockchain is the opposite. Blockchains are inherently transparent, which is good for the general public, because now they suddenly can see where all your money flows to. There won't be any more hidden fees when you subscribe to funds, because you can see exactly where the money goes to. And the second point is inclusion. Asset management used to be exclusive to a select few. I worked in a Swiss multifamily office before I joined Melonport, and we would only offer our investment solutions to ultra high net worth individuals. So anyone I think below 5 million would just reject. Same for hedge funds, right? Many of them don't even accept your money if it's less than 100K. And it makes sense. I mean, part of the reason why they don't accept it is because every new client they onboard is associated with lots of, more workload. And I don't want to put that workload on my shoulders for just a 3K investment. So it's understandable. And we are changing that. So we're bringing down the barriers to entry so much for both investor and investment manager that now you can be part of the financial systems, like I said, with just a laptop or with internet connection. Actually, our developers are right now working on a mobile version, so when they're ready, you'll have access to the global financial markets through your cell phone, which is quite cool. It's very inclusive. And to give you an update on where we are right now, we just finished our first competition on the common test network. We did it on the test network to test the logic of our contracts, playing with play money in case something goes wrong. As we speak right now, our developers are launching the first decentralized tokenized fund on the Ethereum blockchain. There will be in the form of a bug bounty, like you mentioned. We're going to put, I think, 500 melons in there. If you can take them, they're yours. We're even going to have a ceremony for you. And if everything goes well there and we fix the bugs, we're going to deploy the version on the Ethereum mainnet, so you can set up your own funds. But there's one problem with the Ethereum mainnet, which is that you can only trade ERC20 tokens, right? We are completely on-chain, nothing we do is off-chain. And that's a bit restrictive because, most tokens are ERC20 tokens, but you can't even buy Bitcoin or Litecoin. So that's why in parallel to deploying the live version on the Ethereum mainnet, we're building our own blockchain, the Melon chain, a custom asset management chain. And don't get me wrong, I would love Ethereum, but it's a general purpose blockchain. And many of the functions that they have, we don't need. That's why we're building our own ones. And then we don't have to share all the traffic with Ethereum. So it'll be much faster, we'll reduce the gas costs, so it's great. And then the last stage of what we do is we're going to integrate the Melon chain into Polkadot. Polkadot is a project by Web3 and Parity. And what they do is Polkadot allows blockchains, independent blockchains, to exchange information between each other. So once Melon chain is integrated and the other blockchains integrated into Polkadot, you can communicate with all blockchains. You can trade anything that's tokenized. So that's the end vision. I think I'm running out of time slowly. So I want to focus my last minutes on I think really important. When we started Melonport, the market was still relatively small. And it was easy to have an overview over everything, right? There was 1 or 2 new projects every month, and if you could read the white paper, and if you had questions, you could go to the Gitter and chat with the team directly. And now it's different. Yeah? Now we see a new ICO every other day, and they all use the same buzzwords. They all say, remove trust, or no trust needed, and remove the third party, and decentralization. And I feel like some projects just throw in random buzzwords to make it sound more attractive. And we also use AI and machine learning. And I don't even know if it's any point of doing that. So what I'm trying to say is it's very, very difficult to remember anything about any company nowadays because there's just so much out there. So if I do have one thing I can choose for you to remember about us, it's our values and why we do what we do. We're trying to build an alternative to the current financial system. Yeah, we're not gonna tell you should use Melon because it's more secure and it's more efficient, it's cheaper, which it is. We just want to give you an alternative, right? So you don't have to keep your money with the bank anymore if you don't want to. Right now you don't have another option. If you have 5,000 euros, you can keep them in your house, that's cool. But if you have several million worth of assets, you have to keep them with a bank. Otherwise, you run the possibility of someone stealing it if you have it in your house. And also, you can't exchange them easily, right? Imagine you have a bunch of Apple stocks underneath your bed. What are you going to do with them? How are you going to get rid of them? And yeah, we are trying to build this alternative for you. The Melon project is also an open source project. So everything we do is very transparent. You can see all our code on the GitHub. So you really don't need to trust us and what we say we do, you can just read it. And Melon is also intended as a public good, like the internet. So we are building the Melon protocol, but once we finish building it, we're going to roll it out to the people for free, and then we're going to take a step back. And then we have no more special privileges over it. The Melon token holders, that's what the token is for partly, the governance. If you have 1,000 tokens, I have 1,000 tokens, and I work for Melonport, once it's done, I don't have more rights than you deciding how it's going to go on. And because we don't own the Melon protocol, we also can't charge any fees. Yeah? This new fund administrator that we're building is completely for free to use for everyone. Well, actually, it's not for free. If you call a function on the blockchain, you have to pay gas, but that goes to the miners or stakers. Not a single cent goes to us. And because we don't own it, you also don't have to ask us for permission if you want to use it. I get that a lot. I get emails that ask me, hey, what process do we have to go through to use the Melon fund administrator to set up our fund? And I always ask the same thing. You don't have to ask me to do it. You can just go to the website and do it yourself. We can't stop you, even if we want to. Yeah, that's it from my side. Thank you all for listening, and I hope you enjoy the rest of the conference.